What's up, financial Zen masters? If you work for yourself, you must watch this. I'm about to save you a boatload of money in taxes. And if you don't work for yourself, but you know people that do, you must send this to them. Period. The end. But first, welcome to the Financial Zen channel, where the big question is, how can you, a super successful, hardworking professional with kids at home and a mortgage to pay, how can you quit your 9-to-5 grind to go pursue your passion while still providing for your family? That's the question. I got your answers. I'm Rick Valenzi, and I'll be your guide. Okay, this is a big one. So here's people that this will pertain to. If you're paid as a 1099 employee, you need to watch this. If you're a sole prop and own your own business, you need to watch this. If you have your business formed as an LLC, you need to watch this. Here's why. You're paying more in taxes than you need to be. Period. How would you like to save about 15% in your taxes? Do I have your attention now? Okay. Here's how it works. Slight educational process on how your taxes work when you get paid in any of those forms, or paid as a W-2 employee for that matter. It's all the same. So you got income tax, which we all know about, right? That's the money, part of the withholding that your employer withholds. We all know how that works. And then we got payroll taxes, which is Medicare tax and Social Security, okay? Now that's called payroll tax, and it's roughly 15%. Not exactly, but close enough for conversation's sake, okay? So 15% of your money goes to the government. Now, out of that 15%, if you work for somebody, if you work as a W-2 employee, your employer pays half of that, and you pay the other half. So your company pays 7.5, and you pay about 7.5, okay, if you're a W-2 employee. If you are a 1099 or sole prop or an LLC, you are both the employer and the employee, okay, which means you pay that entire 15% all on your lonesome. Your employer doesn't pay half, you pay the whole thing, okay? Womp, womp, womp. Now, what's interesting is, if you really geek out on this stuff, you might already know, half of that, the portion that you pay as an employer, 7.5% that you pay as an employer, is a deduction on your tax return. So you get a little bit of that money back, but it's not one for one. It's not like they refund you that entire portion, right? It's just a deduction on your tax return. Okay, so if you're one of these entities and that's how you get paid, you're overpaying in taxes. Let me show you the magic sauce. And the word of the day, kids, is S-Corp. Here's how an S-Corp works. An S-Corp, okay? So if you are any of those three entities, LLC, 1099, or sole prop, you can form an S-Corp for your business and get paid, get your people to pay the S-Corp, not you. And if you do that, you're gonna save a bunch in taxes. So here's how it works with an S-Corp, okay? You get paid two ways with an S-Corp, okay? You get paid via payroll or dividends. Now, dividends is also shareholder distributions. It doesn't matter. It all means the same thing. Shareholder distributions, dividends. It's money that's coming. That's the other way that you get paid. Now, payroll, okay, so let's say your S-Corp made 100 grand last year, okay? If you pay yourself 50 grand through payroll, then you're going to pay that 15% as an employer and an employee on that 50 grand that you paid yourself through payroll. The stuff that's left over, 50 grand, that will hit your checking account via shareholder distribution, avoids the payroll tax. Boom. Okay? So now what's the rule of thumb for this breakdown is you need to pay yourself a reasonable salary for your industry, right? So let's use a financial planner as an example. The average financial planner makes about 60 grand a year. Okay? So as long as I pay myself 60 grand a year, okay, the IRS, and if I ever get audited, the auditors will be happy. They're like, okay, well, you're paying yourself a normal salary for a financial planner. You're paying payroll tax on that. Cool. You're good. But everything else floats through as dividends and avoids the payroll tax. Now, everything down here does hit your income tax, so you don't avoid income tax this way, okay? You will pay income taxes on that, but you're gonna avoid that 50% payroll tax. Boom, mind blown. Now, the magic stuff is, let's say, once you're paying yourself a reasonable salary as whatever your profession normally does, if you're making more than that, then you're making more in dividends, which means you're saving more and more in taxes. So the more successful your small business is, the more successful you earn as a contractor or a freelancer, the more money you're saving in taxes. All right, that's part one. So if you're an LLC, a 1099, or a sole prop, run, don't walk to form your S-Corp. Go talk to a business attorney. Don't do this on your own. You can do it on LegalZoom. Please don't. Go hire an attorney. It's worth an extra couple $100 to make sure you're doing it right. And go form your S-Corp and get all the things structured in place. You gotta do. There's a few different moving pieces to doing it, but it's pretty easy. Trust me. If I can figure it out, you can figure it out. And do that and start saving today, this year, right? Anything that you're getting paid right now, you can save that 50% this year. Okay, so that's part one. Part two, which I'll post tomorrow, is going to be how once you have an S-Corp, you can save up to $57,000 per year in your 401k. That's some good stuff. All right, thanks for watching. If you learned something, make sure to subscribe. If you learned something, like it, please. And leave a comment. If you do work for yourself and this is going to be super helpful, let me know. Let me know how excited you are. And again, if you know somebody else that works for themselves, send them the video, the link to this video. They need to watch this. This is not common knowledge stuff, okay? This is not common knowledge stuff. So make sure you are spreading the word. All right, thanks for watching. We'll see you tomorrow where I'll show you how you can save 57 grand in your 401k if you're an S-Corp. Till then.